Hi everyone, welcome to today's session, Mastering Your Mindset, the Hidden Edge in Forex Trading. I am Timothy Carrier, and I'm thrilled to guide you through a part of trading that often is overlooked. The fact that it's often overlooked, yet it's what truly separates long-term winners from the rest. That is mindset. So, for you as a trader, mastering mindset is very essential. And like I've said, this is what is going to separate you from being a losing trader to a successful trader. So it isn't just about psychology theories. It's about giving you practical tools to level up your trading mindset. So always, it's good to remember that strategy gets you in the game, but mindset, it's what's keep you in it. All right. So let's dive through. Um, like I've said, in trading, it's not about strategy, but it's about your mindset. You might have a very nice strategy, a high probability strategy, 95% high probability. But if your mindset is not okay, or if you have not tuned your mindset in a proper way, you find that you still might not be able to succeed in Forex trading because this is a game of the mind, right? This is a game of the mind. So, why does mindset matter in Forex? Why do we really emphasize on mindset? It's because what you need to understand is that the market doesn't owe you anything. Okay, the market doesn't owe you anything at all. That's how you need to approach it. Because the moment you approach the market like it owes you anything, like maybe it owes you money, or you need to go and maybe make some money. So that's basically a wrong mindset. Like I always emphasize is that anytime when you're trading Forex or when you're learning how to trade Forex, the key thing that should be in your mind is how to become a successful trader, not how to make X amount of dollars, right? So the best mindset is how to become a successful trader, how to be able to improve on your skill and knowledge. Because the moment you master the knowledge or the moment you have the skill, then money will definitely come into play. So you realize that most traders lose not because their strategy is wrong, but because their psychology is weak. And I remember the last live session that I did, I really emphasized a lot about building a bulletproof trading psychology. So the link is attached to this session so that you can probably revisit or look at it if you didn't attend the live streaming. So we also looked at the common statistics that we have in the industry, and we said that 90% of traders quit within 90 days. And the 10% that survive the 90 days, they quit within 90% of those 10% quit within the next 90 days. So it's like a filtering funnel, right? It's like a filtering funnel. So for you to be able to sustain, to be a successful trader, then mindset, it's something that you really need to work out. Because one thing, having interacted with so many traders, you realize that when most people think of why traders fail, they usually blame bad strategies. But you find that, like I've said, that's rarely usually the case. Because if you dig deeper, you realize that the truth is most traders already know what to do. Like I've taught you so many strategies, even in my YouTube channel, I have so many strategies that I've been able to teach you. So I know most of you guys know what to do. But the problem is you don't follow, or maybe they don't follow through because their mindset isn't ready. So the reason why we are saying that having a ready mindset or fine-tuning your mindset is very important. So as you'll understand is that the market doesn't care how smart you are or how badly you want to win. Basically, what the market does, it rewards discipline and resilience. All right. So it's important. to understand. The moment you understand why mindset matters and you're able to work on your mindset, then it becomes quite easier. So there are three pillars of a trader's mindset, and these are things that will help you now to be able to know how you are supposed to tune your mind, or how you are supposed to align your mindset. And to succeed in this game or in forex trading, basically we look at discipline, you look at patience, we look at emotional control. So when you're talking about discipline, this is the ability to follow your plan even when emotions tempt you otherwise. So you stick to your plan. The trading plan that you have, you did not write it just for the sake of writing. You wrote it, or you came up with that plan so that you can be able to follow it. Then patient is very important as well. And patient is knowing when not to trade and when to trade, right? Because knowing when not to trade is just as powerful as knowing when to trade, because not all the time that you need to be exposing yourself in the market. So you need to know when is the best time to trade. For instance, which is the best session to trade your asset, okay? And what is maybe probably the best time that maybe probably your asset gives you some trading setups. So if it's not within that time of range, then you need to be patient and wait for the price, maybe for that time to reach out, or maybe even the patience to wait for the setup to materialize. Okay, so emotional control, again, it's another key pillar. And this is keeping fear and greed from sabotaging your decisions. So fear and greed will definitely alter with your emotions. So fear will make you become hesitant or maybe exit trades early. Greed will make you to over leverage and use bigger lot sizes than your account balance can be able to accommodate. So it's important to be in a position whereby you're able to control your emotion, how to control fear, and also controlling greed. So you understand that even if one of these is weak, either discipline, patient, emotional control, your result will still suffer, or probably you'll struggle to being successful. So the three of them have to align. You really need to fine tune your mind such that you are disciplined, you are patient, and you have emotional control. Not two of three or one of three. There has to be three or of three, 100%. You have to score 100% in those three pillars. Then you need to when we talk about, maybe you can go deeper now in terms of discipline. So discipline is what I refer to as your trading compass, right? So following your trading plan, even when it's boring, for instance, okay? So you have a trading plan that you have created, but now out of this trading plan, you have created it from a strategy that you back tested and things that you find working for you. So as much as it might be boring, then you need to tame yourself or train yourself to be disciplined in terms of following your trading plan. So this is whereby you say no to over trading, because you understand that lack of discipline can wipe out your gains in one bad decisions. All right. And I know this is very much relatable to us. I know most of us have done these, have maybe probably blown accounts because of indiscipline. Okay. And like I usually say that trading again reflects the kind of person you are. So if you find yourself uh, you're not in discipline even by nature, then it means that even in the financial market, you'll struggle with discipline. So you really need to put the best foot forward to be able to work on your own discipline first, even before you start becoming disciplined in the financial market. So discipline is basically doing what needs to be done, especially when you don't feel like doing it. That is what we call discipline. Not doing what is supposed to be done when you know when you feel good to do it. So that moment when you don't feel like doing what you're supposed to do, you don't feel like following your trading plan. All right. So that's now in discipline. All right. So in short, what I'm saying is discipline is doing what needs to be done, especially when you don't feel like doing it. All right. So it means following your trading plan to the letter. even when setups look boring or your guts says maybe just one more trade, because you have had that situation of just one more trade. So let me use maybe a slightly high risk just on this one more trade, right? And this one more trade, then that's where things starts going wayward. So one moment of over trading, you realize that one moment of over trading or one moment of breaking your rules can erase all your gains or can wipe out all your gains and even lead you to blowing accounts, especially if you are struggling with risk management. So I'm talking this out of firsthand because firsthand experience because I have been there. I have been indisciplined in the financial market. I have lost money because of indiscipline, right? So it's important to be disciplined, all right? It's important to ensure that you are disciplined in the financial market. Then when we talk about patience, like I said, is the ability to wait for high probability setups. So the key thing is to avoid chasing the market and let the market come to you. So if you have marked your levels, maybe you have marked your support levels for a buy, you need to be patient to wait for the market to come to your support levels before you trigger the bullet. If probably you've marked your order blocks, let's say maybe a bearish order block, you need to be patient for the price to come to your level of interest where you have the order block so that you can be able to execute. Even if it's going to take 2, 3 days, the key thing is being patient and waiting for your strategy to formulate 100%, right? So, patient, this is whereby now we have the power of doing nothing, right? Because most of the traders think that they are doing nothing, waiting for the price to come to their points of interest. Maybe you have been waiting for a week, especially if maybe you trade only one asset, right? You can wait for weeks, you can wait for days, okay? So what you need to understand is that great traders aren't always trading, right? So they are always waiting, or they always wait for their setups to materialize. So waiting for the market to show up on the waiting for the market to materialize in terms of their strategy instead of forcing a setup. So sometimes the best move is to do nothing, right? So that's what you're calling the power of doing nothing. So the reason why I always say that sometimes the best trade is not to trade, because you're not just executing trade for the sake of executing trade. Remember, this is your hard-earned capital. You are protecting your capital. So you only want to take high probability trade setup. So the reason why you're saying that sometimes the best trade is not to trade. When you don't have a setup, just don't trade and wait for the setup to materialize. Okay. So, and that's wisdom, by the way, because patience lets you preserve capital and mental clarity. Right. So then emotional control, the third pillar. And emotional control, this is where we talk about mastering fear and greed. So, which are very important. It's very important for you to master fear and greed. So, fear leads to early exit and hesitations, like I said. Greed leads to revenge trading. Leads to revenge trading, right? Or maybe probably over risking, right? Taking a higher risk. So, how do we beat fear in forex trading? So you find that beating fear in forex trading is actually one of, if you're able to master how to beat fear, is actually one of the game changers, especially for consistently executing your edge without maybe probably second guessing. And fear in trading usually shows up as maybe fear of losing money, fear of missing out, that is FOMO, or fear of being wrong. So those are the three most types of fear in the financial market. That is the fear of losing money, fear of missing out in an opportunity, and also fear of being wrong. So how do we beat fear? Number one way to be able to beat fear is to accept that losses are inevitable. So losses, the moment you accept that losses are inevitable, then it means you understand that losses are not failures, but they are part of the game. Actually, in the financial market, you will not win all the time. right? I won't lie to you. You'll not win all the time. There are times you'll take even high probability setup, 99% probability, high probability, but the market will still eat your stop loss. So you need to understand that losses are not failures. So they are part of the game. And the moment you understand that, then now each and every trade you're going to take, whether it's 99% probability, high probability, or maybe 80% high probability, then you need to ensure risk management, proper risk management. All right. So, again, if we talk about in terms of mindset, so you have to have a shift in your mind in terms of how to approach losses. So, for instance, when you take a loss, maybe probably you might want to tell yourself, maybe I didn't lose money, I paid for information. Why? Because now when you take a loss, you probably find that maybe there is probably a mistake that you did or something that you didn't know. Now that you have been able to identify that mistake, then you are paying. The losses are basically payment for you learning that kind of information, right? So the best thing that you need to do is to backtest your strategy and calculate its average win rate. So if it wins 60% of the time, then you're supposed to lose 4 out of 10 times. That's not failure again, because if you look at it statistically and applying proper risk to reward ratio, then you find that you are still ahead in terms of gains or in terms of profits, all right? So you really need to back test. The moment you back test and you're able to know the average win rate of your strategy, then it helps you even to mitigate the aspect of fear, right? So the second way to be able to manage fear is to reduce position sizes. So I always tell you that if you're trading an account of $1,000 and you feel that you are fearful, the best way is to lower the risk completely. Use this minimum risk, that is 0.01. You use it for some time consistently. So when you start winning again, what it does is that it helps your confidence, all right? It helps boost your confidence. And as your confidence get boosted, then fear definitely goes away, right? So because you find that fear intensifies when too much is at stake. So the key goal or the way to overcome this definitely is to lower your risk, right? Is to lower your risk. Then the third way to be able to deal with fear is to have a written trading plan. So because one thing that I've realized with fear is that it thrives in uncertainties, all right? It thrives in uncertainties. So to avoid uncertainties, a trading plan will help in terms of giving you confidence so that you don't hope you know what to do. Because if you're trading out of hope, it means you don't have a trading plan, then you're trading with hopes, all right? And we don't want to trade with the hopes, because the moment you trade with the hopes, then fear will be part of you. So we want to trade when we know exactly what to do. And what tells you exactly what to do is your trading plan, right? It's a trading plan that tells you exactly what to do. So the things to include in your trading plan, for instance, your entry rules, all right, exit strategies, risk management, trade checklists, right, like market structure, liquidity confirmation, etc. And in the description, I've put a link to a video that I did about trading plan, how to come up with a trading plan so that you can basically rewatch it and maybe probably remind yourself or teach yourself how to come up with the best trading plan. So the other thing that you need to understand is how to use for you to eliminate fear is the use of a journal, a trading journal. So journaling detaches emotions from execution, and it helps you see patterns in your fears and what triggers them. So basically, what do you track in your journal? So you can include how you felt before, during, and after a trade, and also what you feared and how you responded, and probably what you learned. Right. So you see, the moment you try to find out these things, or the moment you track these things, then you'll know the pain points when it comes to fear, and you are able to address those pain points. Then the other way to overcome fear is to take breaks after losses. So if probably you lose 5 consecutive trades, or maybe let's say even 2 consecutive trades, in a row, then it's good to step away, because if you have a streak of losing trades, what comes into mind is fear. So the reason why you are stepping away, or the reason why you are taking breaks, maybe 2 days, 3 days, is to let emotions settle before re-entering the markets, right? So you really need to understand that when emotions are high, probability is low. So you need to really step or take some breaks, step aside, take some break, then let emotions settle, and then now you come back to trading when your emotions are at par. The other way to look at to handle fear is basically to train like an athlete. So you find that athletes usually visualize success. So even for you as a trader, you should visualize success. So the reason why you see athletes when they are lining up, maybe before they begin a race, you see some jumping, others can even yell, "Yes, I have this." Yani they are trying to visualize success. They are seeing themselves already successful, and this has really been able to help them. So even we as traders, we need to visualize we need to visualize our success. So even before you take a setup, visualize in the morning when you wake up, visualize that how a successful trading day gonna be, right? And that helps to fine tune your emotions. So visualization basically strengthens confidence and reduces fear in terms of response. All right. So the best way to do this is before trading, probably you can close your eyes and visualize. So you visualize yourself maybe following your trading plan. You visualize yourself losing and accepting the loss calmly, and then you visualize yourself executing with precision. So the moment you visualize that, higher chances is that whatever you are visualizing is likely to materialize. And then the other way to be able to deal with fear is to surround yourself with focused traders. So fear loves isolation, because the moment you're in isolation, then you find that fear will definitely be part of you. So the key thing is to be in a disciplined trading community, like what the community that we have in Discord, which gives you a perspective, accountability, and mindset support. Okay. So the last thing to deal with fear is to what I call daily mindset training. So meditate 5 to 10 times, maybe 5 to 10 minutes before trading, or use affirmation. I really emphasized on affirmation in our last session that we did, the live stream that we had, how to build a bulletproof trading plan. So you can watch them and look at some of the affirmations that I shared. So basically, in a nutshell, the formula to beat fear in trading, it's preparation plus risk control plus consistency plus consistent execution plus reflection is equals to fearless trading. I'll repeat again. The formula to beat fear is in trading is preparation plus risk control plus consistent execution plus reflection, which is equals to fearless trading. So I've really taken some time to emphasize on fear, because I know most of the traders, even those that I have interacted with, 80% of these traders suffer from fear, right? So the other thing that you need to understand is the psychology of losses. So when we talk about the psychology of losses, right? So the psychology of losses is for you to understand that losses are a cost of doing business. Like I said, losses are inevitable. And once you take these losses, understand that they are part of the game, and probably they are a cost of doing business. Then the emotional response to loss often triggers a spiral. Right? So how you respond to loss, okay, it's very, very important. So the importance of risk management and accepting small losses becomes very key for you to be able now to accept these losses, because again, if you are taking high risk, right, so then it means you will incur huge losses. So accepting those huge losses sometimes become very difficult, because you have really lost a lot. But if there are small losses which are well managed, that is through proper risk management, then it becomes easier to accept that it's a cost of doing business. All right. So we said that losses are part of the game. So they are a business's expenses. But most of the traders react emotionally, turning one loss into a series of bad trades, right? So that is if you don't know how to tame your emotions. So it makes you even to overtrade or revenge trade. So that's when now what I'm calling emotional response to loss often triggers a spiral. So we have now the spiral that begins from fear because you have lost. Then fear leads to overtrading. Overtrading leads to more losses. Then it leads to more to doubt. You begin doubting your strategy, and then it leads to burnout and also blowing your accounts. So the key thing is risk management and acceptance, right? So if you have defined your risk per trade, a loss shouldn't really rattle you because you already defined your risk. Maybe you want to risk 1% per trade. Again, don't risk more than 2% so that now you are able to accept these small losses. So it's losses, what I should say, let's look at them as not being failure, but as a way of giving us feedback. Feedback in that you're able to revisit the trades, look at the things that made us lose those trades, and that's the feedback. The moment we get the reasons why we failed, then we are able to avoid repeating the same mistakes. So that's what it's called feedback. Then it's important to look at the differences between a growth mindset and a fixed mindset, because you find most of the successful, actually all the successful traders, they have a growth mindset, but most of the traders who don't make it in trading, they have a fixed, what I call a fixed mindset. Okay, so this is more of an internal dialogue for you to have as a trader. So you need to have this internal dialogue with yourself, right? So because it will help you know whether you are locking yourself into failure with the limiting beliefs or you are choosing to grow. And here it's a comparison of fixed mindset versus growth mindset. So a trader who has a fixed mindset will always say, I can't trade. But a trader with a growth mindset will say that I am learning to trade. Even when you take losses, you say that I am still learning to trade. So a trader who has a fixed mindset, they view losses as failure, right? But a trader with a growth mindset, they view losses as feedback. Then a trader with a fixed mindset, they say that they need to win because they look at the market and say that the market owes them money. They have to really make money from the market. But a trader with a growth mindset, they view it as I need to execute well. Because the key thing is executing the trade well, managing the process, and then the outcome uh, will definitely be a good outcome, right? So it's also important to look at tools to help you build a strong trading mindset. And some of these tools is daily affirmations or mindset routines, right? I really emphasized on them in the previous live stream. Backtesting to build confidence. So if you are backtesting a strategy, it's good to look at the past, to backtest the past a whole here data so that now you can be able to say that your strategy is a high probability strategy or not. Then trading journal basically to help you reflect and adopt to the new changes that you might find maybe worth adjusting, right? Then there is the aspect of accountability. So whereby maybe you can look for a mentor or probably join a trading community, basically for accountability, right? So daily affirmations or routines, this is whereby you start your day with clarity and not chaos, all right? You start your days with clarity. So you affirm that I am a successful trader because I am following my trading plan, or I will be successful today because I'm going to follow my trading plan. That's an example of an affirmation. So backtesting will help you build confidence in your strategy and reduce hesitation. That is fear, eliminate fear. Trading journal will help you identify emotional triggers and patterns, and therefore you can be able to avoid that next time. Accountability, for instance, having a mentor or a community, that keeps you on track, right? It helps to keep you on track. So you need to understand that mindset doesn't build itself. And if you use these tools, they'll really help you basically to shape your mindset brick by brick, okay? Because it's a work in progress, right? You can never say that you are like all of a sudden 100% your mind is up to par, all right? So it's a brick by brick, step by step, all right? So then you find that this thing that really has made people to go wayward, compounding, right? Like I always share with you guys, you'll find that sometimes you'll go online and find some spreadsheets that will show you how to compound $100 in 90 days, and you turn it into $1 million, right? That's what I was when I was very new. That's actually some of the spreadsheet that I met along, and they tampered a lot with my mindset because I viewed this trading now as a rich quick scheme, a quick way to make money. So I knew that I'm entering this within 90 days. I have my $1 million and I retire completely. I don't want to do it forever, right? But this is the ninth here and I'm still doing it, guys. Okay. So the key thing is don't really, even though we are compounding or even though you want to compound, basically focus on growth, percentage growth, not profits, right? If you focus on profits, like I used to focus on how to turn that $100 into $1 million. So definitely it's not gonna happen because what will come into your mind is the aspect of greed. But if you looked at it as uh, percentage growth, maybe on a monthly basis you're doing 5%, right? So you find that with the time, which 5% is actually reasonable in on a monthly basis. So with the time, if you are patient, then your account will be able to accumulate and compound. And the more money you have, the more the compounding now becomes even sweeter, right? So the key thing again is to avoid pressure to get rich quick. Um, this is not a get rich, the financial market is not a get rich quick scheme, right? I can give good examples like Warren Buffett. He began investing in the financial market when he was 16. Right now, he is doing it, he is around 85 years of age and still in the financial markets. So this is not really a get rich quick scheme. So you need to use the power of consistency and small wins basically to carry you all through, right? So if what you need again to understand is that for amateurs or novice traders or newbies, they focus on rewards, but pro traders focus on the process. And the reason why I always say that when you come into Forex trading, begin the right way. Don't begin from a point of failure. Begin the right way. Yes, you have come into Forex trading because you want to make a side hustle, right? You want to make it maybe a side hustle or maybe a full-time job. But the moment you come with the aspect of making money, you find that you might not, or you might quit along the way if you don't make that particular money. But if you come with the mentality or the mindset that you want to learn how to trade so that you can be a successful trader, you'll put your best foot forward for you to be able to be a successful trader. You look for a mentor, you look for trading communities that support you, etc., etc. So you'll do anything possible to make sure that you become successful, right? To make that you become successful. So in parting shot, what you are saying is um, your mindset is your ultimate edge, right? Your mindset is your ultimate edge. So strategies do evolve, markets do change, but your psychology stays with you, right? Your psychology stays with you. So invest in your mental game as much as your technical game, right? Because you understand that the market will test it every single day. You'll be tested every single day. So the reason why you need to invest a lot in your mental game as much as your technical game. So that's it, guys. Until the next episode. See you. Stay safe, and remember to like, share, and subscribe.